Oh, let's stop that before the next little bit of that song. We're gonna get too ramped up, right? Too much, too much hype. All right, the market was pretty interesting today, especially if you're new to trading. You know, the number one question I got today from all my clients was, "What the hell's going on with the Aussie? They cut rates. Why is it higher?" Now, okay, well, yeah, they did cut rates. Was it a big surprise? Not too much. Was there some hints from the price action after they cut rates that the market wasn't going down? There was plenty of hints. All right, straight away you saw support at 75, underneath 75. Okay, that's a really small move if you cut rates. So if you've been trading for a little bit, you've been like, okay, well the cut rates should be going down to say 74. The fact that it didn't even get to 74.50, that is extremely bullish price action. You know, you can't. There's no other way to interpret what just happened when the market, bounces straight away after you cut rates. All right, so people then start looking through the statement that comes with the announcement because that's where you're going to get the follow through or no follow through. And there was nothing really in there to suggest they're going to cut again soon. And given the situation where the US dollar is on the back foot, where the market's sort of waiting for this RBA and has already started to price in a cut given the fallback yesterday from 76. This is actually hasn't negated any of its technicals. I mean, even in its biggest falls here, the Aussie hasn't been negating its technicals. And now there's no reason for you to be short apart from, say, the selling of oil. All right, but the main game in town right now is selling the US dollar, and you just got a best level, and the market found support, at the key level of 75. It's like, well, all right, well, what do we do now? Well, if they were short, I would just tell them straight up, get out. All right, if they were long, because there's a few gamblers out there who want to get, the bigger reaction, which would have happened if they didn't cut rates today, then you just hold this because this is showing every sign that it wants to go up. All right, now we were talking yesterday about how to play it, and what we suggested is that we're going to buy Aussie Kiwi after the RBA cuts because the next game in town is going to be Thursday next week, which is going to be RBNZ, and they're going to cut for sure. All right, so we've got all this follow up to that. We've got the next week where the market can say, well, RBNZ's coming up, Kiwi's going to stall, and the Aussie can do anything in that time. You can have a huge rally, can get sharp, towards 77, 78. Whereas the Kiwi is going to struggle to get past 73 in the same sort of weak US dollar environment. So I immediately bought some Aussie Kiwi after that announcement. On a few accounts I bought Aussie, on a few accounts I bought Aussie Yen. Now luckily for me, I was a bit skittish on dollar yen, so I got out the Aussie Yen before this collapse that just happened at the start of Europe. So I'm just long Aussie, Aussie Kiwi. But you don't usually buy Aussie against the US after an announcement. You have to see the very peculiar price action. Yeah, I'm not going to say that it's easy to have seen this happening, but there was definitely clues that the Aussie was going to rally. The main clue being that the market sold off into it, then didn't fall after the cut, and immediately bounced back. Relatively sharp bounce back, and the US dollar, the other thing that you're trading against, being on the back foot. This sets this sort of thing up, and it's likely it's going to be a pretty strong move to the top side here, given that initial this initial setup is one of those setups where you can easily get to 77. Yeah, just squeezing. Sort of how the Kiwi's been going lately. Kiwi's been just squeezing. But the Kiwi has its own RBNZ, so it's going to fall behind, most likely. At some point, right? I don't want to be the first one to sell the Kiwi, not when it's in a rampage mode, but it is, you got that backdrop where some point in the next, probably Monday next week or Friday this week, you're going to start to see a bit of selling pressure come through and a narrative develop around that. And hopefully from there, we get the Aussie Kiwi bouncing off this own key level, a little bit outperformance, and then the charts will look really supportive of being long. So let's just. So Aussie and Kiwi are very similar pairs, and it's just really it's a timing game on this particular trade. So the market rallied on the Kiwi news last month, yeah, that they're going to cut rates. Then the market sold off as the RBA loomed. Now the RBA's cut, didn't get much follow through. It's bouncing back. This is a good buying area anyway. And you know, if you trade like I do, and you try to set up trades based upon announcements and likely market scenarios, then you know it's very easy to see that the Kiwi underperforms. Now this is not to say that the Kiwi itself is going down, right? It's just going to underperform the Australian dollar going forward, whatever happens with the US dollar. And it takes a little bit of the US dollar out of it. So I can be long Aussie Kiwi quite aggressively here going into the non-farm payrolls, right? It's not really going to be a major factor in what goes on. Whereas every other pair is going to be, all those majors are going to be affected so dramatically that it's hard to trade them. All right, so there's actually another trade that we were talking about yesterday that's come to very nice levels as well. And it also bypasses what's going on in the US dollar. Yeah, and that's Euro Swiss. And this is just a range play. It's pure range play. But I have a preference of buying this rather than selling this. So whoever's selling the 109, I'm the one who's buying at 108. Yeah, and the main reason I'm in this sort of trade, and I'm definitely going to pick up a little bit. Let's see if I can buy that much. Might have a minimum lot size here. I'm looking for that to continue, mainly with the SMB having the back here of the Euro Swiss. Okay, so. And even if we do break to the downside, I'm looking to add rather than cut pretty much on this, because like we talked about yesterday, can't really go much lower than 107, because 106.30 was the low in the Brexit day. And so I mean it can, but it can't. And we'll talk about more if it does start to fall. But we've already done this trade a few times in the last 2 months, buying this dip. So we're well positive on this particular trade setup. Let's have a little look here on what's going on in the backdrop here. Big selling coming through in the stocks. I was talking about buying this level with you guys on the DAX, right? We were talking about this setup here. This is actually where we wanted to buy. Now that it's come down here, I'm a little hesitant. There's no rush. I'll just see if it can find support. Yeah, I'm definitely interested in buying dips on the DAX though. But let's just see how it plays out. I'll tell you what, I'm going to buy a little bit. Just a little bit. I'm happy in the next 100 pips for this particular pair. Okay, so yeah, this Aussie is rallying on a few reasons, mainly catch up now with the rest of the market. Euro's broken 112, dollar yen's collapsing. Dollar yen has now pulled back all the way below 102, so fresh new lows, on its way pretty much towards that previous lows now. Very unlikely that we're going to see that support. There is more meetings, emergency little meetings being announced between the BOJ and MOF, but so far these little pop hires have been just good opportunities to sell. So really it's more to do with the US dollar being sold off as well. It's very hard to stop this mid-game. It needs something like the NFP to stop this mid-game, or something dramatic from the BOJ announcements tomorrow, but very unlikely you're going to get that. So let's just let the sell-off run its course. But we're very interested down in between 101 and 100 to be looking for support to build. And I'm not one of the ones who thinks dollar yen's going to go dramatically lower. I'm one of the ones that think it's going to range trade. So I'm more in favor of it range trading. So I am looking for that range to develop. And so far we haven't got a clearly defined range yet. But I suspect that under 100 will be temporary. Yeah, if we get under 100, I think it'll be temporary. And so I do think that there will be a range set up, maybe between 100 and 103. But I don't want to be preemptive on that. Yeah, because the yen does have its own life, and perhaps we are going towards that 95 level. So I don't want to be too aggressive here on the long. The other trade we had, and I've taken profit today early, is the dollar CAD. So dollar CAD long is great. We got a big rally last night. That's fine, but with that US dollar selling and a little bit of oil buying today off that 40 level, no reason to stick around in that trade. So I'm out of the dollar CAD and recommend that you guys close out as well if you're involved in that still. There's just too much potential here for US dollar weakness. Alright guys, just let me check the room here. If you're watching this on YouTube, come across the Forex Signals. This is where you can ask questions and I will respond. You like that music, do you guys? Alright, that's some good stuff. I was actually having a little kick myself. I'm doing early shifts at the moment, so had a couple hours snooze just then. I do want to check up actually if something happened here in terms of statement from the BOJ. It was quite aggressive selling in the last hour or so. I haven't seen anything come through yet, but it could have been just a little offhand as well. I just want to make sure I haven't missed anything. Looks more like just the conjunction with stock market witness that you saw that pullback. Yeah, well, there's nothing major on the headlines. Yeah, and another reason to be hesitant about buying the DAX, even though we are looking for that pullback, is that when you have that clean sort of selling coming through in the dollar yen, that risk-off selling, there is some old correlations there in the market. Namely, the big one is the Nikkei and the dollar yen. And, when you have the Nikkei falling 300 or 400 points because of the dollar yen, it does add a little bit of sour sentiment through the rest of the market. So you don't want to be too aggressive on buying. This is just looks like profit taking, nothing more serious than that. But, you do have to keep in mind that if dollar yen's going to 100, and this sort of pullback continues with the Nikkei, then the DAX might be going towards, under 10.1, maybe even 10,000, which is, even nicer level to buy. And the thing about, stock markets is you have to be ready for it to reverse and to be quite violent, and they don't need much of a reason. Yeah, there's a bit of where you're trading currencies, it's easy to understand what's going on. When it's trading stocks, when trading indices, sometimes it's not so easy to feel, the next movement, right? When it's out of your comfort zone, right? Currencies have a bit more rhyme and reason, actually. Yeah, with stocks, it's more like just keep buying until we're selling. As crazy as that sounds, it's just grind, higher, 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 then collapse. Yeah, grind, slowly. This is the 4 hour. The selling candles are so much bigger than the buying candles, always with stock market. And we haven't had a sell-off for a while. Alright, so yeah, it's rolling over for sure. We're just going to leave this actually for a little bit. We don't want to get in the way of a big sell. But we're definitely using any pullback here as an opportunity to get long. But regardless, you know, we don't even need to be focused on it just yet. You don't even have to take a trade in this, especially when it's selling sharply. You don't have to take a trade in it till you get that level that you're really happy with anyway. You should treat stocks with a lot of respect. Yeah. So really, I mean, I'm just going to focus now on these crosses in the next couple of days. Prepare, trying to get some trades going in here. In terms of the dollar, I'm happy for this selling in the dollar to happen. I'm happy for that to continue, but I don't want to be long or short US dollars into this non-farm. Yeah, the reaction is going to be too violent, and the importance is growing daily. You know, we're coming to a crossroads here for the US dollar for the rest of the year, and this non-farm payrolls is going to set up, you know, if the euro is going to 120, or if the range in the euro is going to hold. Yeah, it's very hard for me to see that a weak number again from the non-farms won't set up a more substantial US dollar sell-off. Yeah, that's really, it's quite critical. And if dollar yen breaks 100 and, you know, breaks it convincingly, you know, all bets could be off for the US dollar across the board. We will focus on the pound obviously on Thursday. You know, it's its own little game. You can think about the pound in its own little orbit though. You don't. It's doing its own thing. But yeah, dollar Swiss, euro, Aussie, Kiwi, and dollar yen. You know, there's some big moves potentially coming. We talked about last night. A few banks talking about 80 cents on the Aussie, and they were talking about that before they cut rates, right? They, you know, that's not a surprise for them. You're talking about people who are buying dips. A lot of traders, a lot of smart money was looking to buy that dip today in the Aussie. You know, straight up against the US dollar. So let's see how that plays out next. You know, if we start to see new highs quite quickly in the next couple of days, and then another weak number comes in from the NFP, yeah, you're looking at a pretty sharp move here. It's the sort of stuff which Rex counts, right? If you don't know what's going on and you're just hoping that it'll come down, there's no easy way this Aussie dollar falls today, guys. If you're short, let me make it very clear. You know, stock markets are down, so that's not going to help. Oil is down, that's not going to help. China data was good yesterday. The RBA's cut. Right, the only thing you can see this week that could help is going to be on Friday. You have the SOMP. Now, what this is also a quarterly release, and it's a market update for by the central bank about their monetary policy. Now, they have used this in the past to open up the door to further rate cuts. They did this back in May. When they cut at the start of May. A couple of days later, they came out with this SOMP. So this is 3 months ago. It only comes out every 3 months. They cut, and then 3 days later, they came out with a very dovish SOMP, and that helped the Aussie dollar continue to fall. That was back in May. But I don't know if that's going to be enough to slow it down here. I don't think the market's going to believe them if they say they're going to cut more. Yeah, so I want to be as bullish as I can be without, you really can't be certain where the market's going. But this is pretty clear to me. So I'm happy to hold my long Aussies right now. What are my thoughts on Goldman Sachs telling everyone to get out of stocks the next 3 months? Versace trader. Sounds smart to me. Central bank disappointment. Global central bank disappointment post Brexit could be a real thing. Yeah. I mean, they're wanting. You know what happened with the FTSE, right? The day after the Brexit is it had that huge rally. Okay, now the reason they had that huge rally is that they were going to get this global stimulus package. Yeah, or this stimulus package out of the UK. Okay, so the markets had this huge rally on the back of that. If you don't get that QE expansion from the UK, that's going to be tremendous disappointment. What's going on with the Japanese? Okay, we got this huge anticipation that we're going to have a massive stimulus package from the MOF, and that the BOJ is going to do something as well. As it's become clear that that's not going to happen, you're starting to see selling coming through. Yeah, this has got a lot of room to move here on that disappointment. So the disappointment trade is a real trade, I think, that could develop here in the global markets. ECB did nothing. Yeah, everyone kept their powder dry. So yeah, I mean, I can see the reasoning that they're worried about the global stock market rally. And I just don't know where you're going to get that next piece of good news from. Maybe China can come out with something, right? China's major stimulus plan might work. But it's like past the hot potato, and there's not many central banks left to do something. And if the market starts to roll over and it gets a bit negative, you know, it's hard to see what can support it. So sentiment is a fickle thing in this game. And you've seen the market switching around a lot lately. If it turns negative here, and if the data actually starts to come in negative, you know, that's the bigger concern. Data has been quite positive around the world. But, you know, some of this UK data is starting to turn negative. Some of the US data is very mixed. If the data turns negative, then things can get very different very quickly. Oil's starting to fall as well, sneakily back down to $40. And there was concerns about oil previously, right? If oil comes back into the game, then you might start to see more negativity. And if you're looking at what's happened in the US stock 500, so S&P, forget Brexit, right? Forget Brexit. That dip there was nothing. This is a dip from oil. Yeah, so sentiment can turn quite sharply here. We've had a huge rally this year. We've had a huge rally. Yeah, creeps up, then just shits itself. It's real. Another good point, Deutsche Bank. Something's wrong in Deutsche Bank. Something's wrong. I mean, people are saying if it broke $10, that was the line in the sand. Where have we got to today? Let's have a look. What they did do yesterday is they removed it from the Euro Stock 50. Stock 50? I think so. That can't be good news. You know, think about some of the companies that have been kicked off the Dow. You know, some of those companies have gone bankrupt. Now, this is an institution, right? You don't really joke about Deutsche Bank going bankrupt. But this profitability is completely diminished in the current ECB environment. So, yeah, look, it's looking pretty sick. And we're talking trillions of dollars inside this bank, right? In terms of it's a monster. It's one of the biggest banks in the world. Its contracts and its derivatives, you know, we're not talking billions. We're getting towards trillions. So I'm not saying it's on the, you know, don't confuse me here. I'm not saying that there's risk of $1 trillion sort of need for bailout, but I'm just saying that the counterparty in trillions of dollars worth of deals. So they're huge in the game. And so whatever they, you know, if it starts to get worse and worse, they can't lend. You know, what banks actually lend upon is their own equity. You know, not the cash on hand, right? They have to have a physical. Um, they have to have their own stake in the game, the return on stock, shareholders' equity, right? All this stuff goes into, and the ECB's Draghi was talking about it. You know, the bank's share price is very important for the ECB, so they're not happy about what's going on here. It's the largest bank in Europe, one of the largest banks. Definitely not the largest bank now, right? But one of the most important banks, and it's struggling. So yeah, the word that on the street is if it goes below $10, there's a huge problem from the lending side and the capitalization side. Trendline change the resolution to be the top resolution if you have any issues. Well, I mean, that's a good question there, Versace. I mean, this is something that they talk about, right? All the talking heads are talking about this, right? How do banks make money when the interest rates are so low? Not easily. Not easily. And this is one of the unforeseen consequences of negative interest rates. And where have you got this negative interest rate environment? You got it in Switzerland as well. Yeah? I mean, what did they do in Switzerland? The banks started charging customers to keep money. Unfortunately, Switzerland's got some other asset management which is quite large, so they're probably going to be okay. But the same problem with the in the BOJ with the Japanese banks. It's hard for them to make a lot of money when the yields are so low. But that's a different story. Let's get back to Forex. Deutsche Bank does directly affect this though, the DAX. So there's another reason to be on the sidelines here on this pullback until we get confirmation everything's okay. What they've done is it looks like they've announced a bailout for the Italian bank. I'm gonna try and pronounce it Monte Paschi or something. So that's taking a little bit of strain off the Italian banks, but a comprehensive and all. I mean, we had the ECB stress tests out of last Friday night, and all these banks passed, right? So the European banking crisis, which has been sort of in the backdrop, and half the reason why the ECB did a lot of their stuff in the last couple of years, hasn't completely gone away yet. But we'll talk about it if it becomes a main headline story. I don't want to confuse you or tell you there's a situation when there isn't directly. There's just something potentially going to be there going forward. At the moment, though, the whole game that we're playing here is Forex, and the Forex game is weak US dollars because it looks like the Fed is benign, no rush to raise rates, and the US GDP numbers so weak, and the sort of reaction that the market goes through when it gets that weak data from the GDP, that takes a few days of trading to sort of catch through. And in that time, you might see the trend change, and then we're going to see the confirmation of that trend change if the US non-farms is anything weak. Yeah, which, given the volatility in the series, remember it was that huge miss 2 months ago, and then the huge gain last month. If we have a huge miss to the downside again, that could be enough to confirm a break. Let's have a little look there at what I'm talking about there with some of that data. Have a little look at Deutsche Bank's review. So let's enjoy some Deutsche Bank articles after just talking about them going bankrupt. right, so some of the dynamics about the RBA meeting that I didn't go into yesterday was Governor Stevens' final one. So there's a new governor next time. Yeah, so that's his last one. And what they did last time as well is that they did use that SOMP as its forward guidance. So the RBA didn't do much forward guidance last time they cut either. Yeah, so this is just talking about that we might see another clarification this Friday. So be a little bit cautious being long into that announcement on Friday. Being long Aussie, that's the main hurdle. We're gonna have a look. So just have a look at a little bit of technical stuff just to begin with as well. I don't give enough time to the technicals. I know a lot of you guys do. So just find your pair there that you're interested in. What's good to do on this sort of setup here is, for me anyway, I like to look at the moving averages. All right, moving averages are quite important to know the longer term trends. So the daily moving averages. So the pairs that you're trading here, it's important to see how far away we are from those moving averages, just to see what's in play. And if we are in uptrends or downtrends. Yeah. So it's important to know, say, like for say the euro dollar, the 200-day moving average is at 110.75. Okay, so in theory, right, we're above all that. We can get we are in a sort of technical sort of uptrend here. If we can start to move higher, it's not going to be a hindrance, so not running up towards it. Aussie dollar is still well above its 200-day moving average. Okay, but certain pairs are underneath it, right? Like the Euro Swiss, a little bit manipulated here, but the Euro Swiss spent a lot of time above 110 not that long ago. Yeah. And it's got a fair bit of room here to even get back towards that 200-day on the Euro Yen. We'll look at that at some point. And obviously the pound yen. Wow. Versace traders are seeing in chat, is there a possibility of helicopter money priced into yen? Well, no, they've said they're not going to do that. So that's not priced into the yen at the moment. If they talk about doing that at all, you'll see the yen get sold aggressively. And what you mean by helicopter money needs to be discussed as well. They seem to be very hesitant towards doing any of that. Given the price action today in the RBA, you have to ask yourself, will the will the Bank of England succeed in selling off the pound here? I mean, they want the pound to go lower to help in the adjustment. I mean, but the market might easily rally after that BOE announcement, especially if they don't do any QE. So the forecast is a rate cut and QE. If they don't do any of the QE, I mean, this could be the beginning of a nice little recovery in the pound, especially if the euro is going higher, right, and the dollar yen's going below 100. Then this pound could easily move back towards that 138 level, not even affecting its longer term downtrend and concerns with Brexit. It can just easily get up there. So regardless of what's said on Thursday, the price action is going to be telling, just same as it was in the RBA today. If we find ourselves higher on the day or reversal happening after initial selling, then perhaps the market is too short. People are saying the market's too short. There needs to be a clean out to the top side, and then you can build up shorts again. But really depends on Carney and how much ammunition he's going to chuck out. Similar, we will talk about the RBNZ next week, but let's deal one central bank at a time. Alright, so this is my favorite report. I like to read that as often as possible. This is a very macro orientated report. So just we'll enjoy it from Jim Reed, why Deutsche Bank's still a thing. Alright, so yesterday we wondered how long, and this is his comment here, how the European equities would last after results of the stress test were given. The answer was 6 minutes. After the immediate rally at the beginning of the Euro Stock 500 bank index, 600 bank index, reversed not long after open and ended day 1.5% lower. I wonder if they're even allowed to talk about their own issues inside their own reports. So, CCJ asking if I've made any comments about Aussie yen. Yeah, look, I love it long. I don't know when the Kiwi buying is going to stop. I do know that we've got Aussie buying to counter it. Yeah, we talked about this at the beginning, mate. So, obviously the Kiwi's very strong right now, but at some point in the next week there will be bouts of selling because you're running into the RBNZ. Now, will it get to 73? That's easily can happen in the next 48 hours. And what happens above that is really up to the NFP. NFP comes in strong, you'll get some US dollar buying. And then next week, it's very easy to see there will be, from these high levels, there will be selling as you get into the RBNZ. And already you're seeing a few banks come out suggesting they're going to do a 0.5 point cut next week. So Yeah, I don't want to sell the Kiwi first, right? I don't want to be the only one selling it. I mean, I know a lot of you guys are selling, and it did seem like a smart trade, right? After the, if you're watching what's happened when it collapsed, then selling the rally made sense. But as this has popped higher, and that US dollar weakness across the board is happening, the short squeeze is starting. This is not really rational sort of moves, and in if you trade a Kiwi, you know that it doesn't really listen to the rules much, and it can definitely go higher. Um, Selling outright in the next 48 hours, honestly, I'm not really interested in selling the Kiwi until we get to say 73.50. And then I'll be tactically selling only because of the RBNZ, right? And then, yeah, you could definitely get some heavy selling next week, especially if they're ultra dovish, and they've suggested they're going to be. But in the current market where there is such low interest rates, and the market's searching for yield, and the Kiwis gets moved along, uh, it's a very low liquidity currency, so you can't sort of predict its moves the same way you can predict the Aussie. It can definitely continue to be irrational longer than you can be solvent. Right, so selling it is very dangerous unless it's tactical and from a very nice level. So if it shoots up to 73, takes out the top, gets to 73.80, 50 to between 73.50 and 73.80, I don't mind selling it up there. But there is a lot of room for it to keep growing. If you go back longer term, this pair doesn't really have too much resistance on the top side. Yeah, so longer term, if the Aussie's getting to 80 cents, then perhaps we're getting to at least 76, 77. Um, this is in the US dollar bear scenario. That doesn't mean that Aussie Kiwi's not going to rally. Yeah, it's just, yeah, there is potential topside here. But the definitely the central bank over there is going to do everything it can to try and cap it, because they want the lower Kiwi. With a lower Kiwi, they'll get higher inflation. So they're targeting inflation because New Zealand imports a lot of their things. So how you get higher inflation is you keep the Kiwi dollar lower, makes your imports more expensive. That's how you generate inflation. Um, that helps the central bank, right? That's what they want. So yeah, look, I have to respect the market's bullish attitude here. But yeah, I'm long Aussie Kiwi. I don't think we're going much lower than 104, and I'm happy. So these are the two trades I've got at the moment: long Aussie Kiwi and long Euro Swiss. Euro Swiss, I'm just playing the trend. Uh, I'll fix these charts up to show my actual trades. But yeah, I really think the Aussie's going to outperform soon. Hope that answers your questions about the Kiwi. I respect the rally. I do think it's going to go down at some point next week. I don't want to sell it outright. I would rather sell it against the Aussie. My topside target for the Aussie Kiwi. Well, I mean, let's bring forward the. Let's have a little look at some of the trade ideas because I posted one earlier. You're interrupting my little review of Jim Reed, right? Jesus Christ. So we went long on the Aussie Kiwi from a limit order that was filled. We've got our stop at 103 and we've got our take profit at 109.50. So I think that's achievable. in the next 3 weeks. Quite a big rally, I know, but not that big a pair. Oh, well, I was going to create the Matrix, man. I was going to break the internet. um, so in regards to a few of these trades, actually, how bad does it look when you're looking inside? All I have to do is hide the video, right? It shouldn't, as long as I don't have the video running, it shouldn't be inside. All right, let's just have a quick look at a couple of these. I don't generally negative vote unless it's a really bad trade idea. It doesn't really help too much, and generally if it's not good form. So selling the, I mean, look, yeah, okay, I do think this is going to go above this level though today. I think US dollar weakness led by the euro and the dollar yen's going to continue to push this higher. I don't think the market's focusing on the RBNZ just yet, but it will focus soon. So Versace trader, I do understand why you're selling, but I don't think you're. I think we're a little early. Hopefully I'm wrong because Aussie Kiwi will go higher, right? Selling the euro, yeah. I mean it's a very tight stop. Has your stop been hit? This is Wrangle. Selling the euro. Yeah, your stop's still fine. I think this is a very dangerous trade. The memo's been sent out, right, that US dollar's weak, and you're sort of not getting the memo. You need a reason to be buying the US dollar right now. We haven't got one. And your take profit is indicating that you think there's going to be a reversal. Now that can happen, but right, give me a reason. And there's no reason just yet. Alright, another short euro. Does he have a reason? No. In fact, what am I looking at there? I do not know. I'm going to put that as a negative. But I'm positive these other two. Alright, that's decent. Euro Aussie short. Okay. We got some bats from Winning FX. Alright, I think this trade's working out for you right now. Let's just have a little look at the... Yeah, this is a great little trade. Great little trade. We're a lot lower actually. So he's in profit. He's doing well. Good trade, Wings. You're posting some good. You're posting some good analysis lately, and I mean this got a lot of negatives. It shouldn't have. I mean people obviously are selling the Aussie when they shouldn't be doing that. Some of these other trades a bit old, so you probably haven't got access to that price section. Alright, but yeah, look, some of those trades are pretty good. Wings, I really like that trade. I don't really use that sort of harmonic stuff, that bats, in my trading. Wouldn't mind to know if that was automated, if you had a system that made that for you, or if that is just your own drawing inside there. Also wouldn't mind to know what the theory is behind this sort of technical analysis. I mean, I have done a little bit of it in the past, but it's like Elliott waves, right? We count to 5. I mean, why? What causes it? I'd like to know a little bit more. That's why me and technical analysis don't get along well. It's like a little bit made up. Well, the patterns work, right? But it's like, well, why do the patterns work? And can we add to this? Can we add to technical analysis to make it safer? That's what you should be asking yourself as a trader. How can I use technical analysis in my trading? I mean, if I don't want to learn all the fundamentals, then fine, right? You can just use technical analysis to find a trend and to get a good entry, and to know if there's momentum issues. But I think a good combination of fundamentals, of reading price action, knowing positioning of the market, and then having the technicals to give you the best entry possible and to give you targets, right? To give you those extensions of how far this can go, this move type scenario. I think that's the best way to use technicals. All right, we're running over time, boys. This is one of the long ones. And I'm not really want to get into a debate about technicals. I mean, I like them. I like them. Don't think that I'm completely against them. I respect, and I do respect them. I do respect fibs. I do respect moving averages for sure. But I don't really use them without having a trade idea backing it up. All right, if there's no more questions, always we're going to finish it there. I know Potter knows a lot about those. Potter, you've been a member of that that website, mate. What is that website? What's that website that you joined? The Harmonics website. Literally, probably called Harmonic Trader, right? That's Let's see how these trades go today. Long Aussie Kiwi, long Euro Swiss. We'll be back tomorrow at 9 GMT. We will. We're avoiding the US dollar while it's getting pumped. But you know we've got a lot this week to look forward to. This is a really good week for trading, guys. You know, mainly Thursday is going to be a cracker. I'm probably going to do the live stream during the BOE announcement, and then we can have a little review of Carney's performance. All right, have a good night, guys. Good luck trading.